Welcome back to the Dividend Diplomats YouTube channel, guys. You've got Bert and Lanny here. Guys, it is Sunday night. It is June 11th here. We are cranking out content here. We're trying to put out as much as possible, record as much as possible to give you guys some dividend investing updates from the Dividend Diplomats table here.
Oh, yeah, Lanny. That's what we're going to talk about. We're going to give an update today on two stocks. You're trying to get to 100 shares, Jack. Oh, all right. So that's really what this video is going to be about here. In case anyone couldn't hear through the mumbling, we're going to give an update here on two stocks that Lanny is cruising towards 100 shares. It's time for an update. This is going to be a lot of fun to talk about, everybody.
Yeah, guys, if you haven't caught the last couple videos ago, maybe last month, there's two certain dividend stocks that I own that I think are currently showing some good value right now that I'm looking to build a position to 100 shares. Rewind then, I was in the 70s on a certain stock, and I was in the lower 80s, upper 70s, and a number of shares on the other stock. Those two stocks is United Parcel Services, ticker symbol is UPS, and CVS, ticker symbol CVS.
My
You know, they're the
favorite.
yeah,
My
yeah,
favorite.
when the ticker matches the name, Bert. Actually, both of them
Yeah.
technically you can argue.
Yep. No, it's always great when that happens. And that's why this one's going to be so much fun. It's you've already declared that you were doing it. So now we're checking in, we're seeing the status, and we're going to get an update and see if you're still feeling like cruising towards 100 on those shares. That's what's going to make this video a great discussion point.
Yeah, and I think a lot of the questions is why do you want to get to 100? From a dividend investor, I know there's a lot that probably can feel the same way in the community. Sometimes 100 shares just feels like, okay, that's a round position. That's a solid position. You know, Go rewind back, Bert sold, two shares of Smuckers he had in his account. Great, you had two shares. So, now I usually like to at least buy and build big positions versus holding just small positions. Obviously, the stock price plays in a big factor there, but having 100 shares, usually of some big mega cap companies, is a round position for dividend investors. And as Bert and I have been chatting a little bit on these videos on 100 share talk, owning 100 shares as a dividend investor, you get income by dividend income, but this gives you the option or opportunity to also write covered calls from an option strategy standpoint on these dividend stocks, aka compounding the income. Just so long as you play it safe and those options don't get exercised. So it gives you the option there. And then third, we're not just buying the stock just to get to 100 shares. So if it had a 30 price to earnings ratio or 100% payout ratio, or no dividend, we're running them through the screener to make sure that they show signs of undervaluation, that they fit our dividend diplomat stock screening metrics. So that's why UPS and CVS have been on my radar, are still on my radar, and why I've still been buying shares in these two dividend stocks.
You hit the most important point there. These are companies that you want to buy and keep adding to your portfolio. That is the most important thing. You're not buying to buy, you're buying because you want to. They meet your metrics and you want to get that mega position to give you the optionality. I think that hits it pretty much on the head. So
Yeah.
let's rewind here, Lanny, with UPS. You were, I think it was what, in the mid 70s, the last one. I want to say it was like 75 in change, 76. I can't remember the exact amount. So why don't you give us a little update on the progress on that? Again, we know you've at least bought one share based on the last video that we talked about, where we talked about our dividend stock purchases. Was that the only share you purchased, or have you purchased more?
I was buying shares even before last week's video. But again, guys, I've been trying to build, and it's hard to build when they're trading at 166, 167 to $175 a share. I'm at 83 to a 3.373 shares, so just a smidge over 83. Um, you know, at today's price, of $170.49, I would actually still need to invest another $2,800 to close that gap. Guys, I don't have that sitting under the mattress. I probably have some sitting in my eBay inventory, possibly. That's a small deal between Bert and I. But, so still, I hate to say it, but a long ways to go. But hey, maybe there's a unique opportunity where kind of what Bert did with the Smuckers, maybe there's another position I could trim or sell off and move into UPS that doesn't, maybe there's a stock that I don't want to have that doesn't grow a dividend or doesn't pay a dividend.
Yeah, so rather than have two shares, two companies underneath 100 that you can't even give yourself the full optionality for, collapse the one position, fold it into UPS, and get it to 100. But hey, you're getting there. You've already made some great progress because if you bought 8 shares already, that's a huge amount that you've already managed to invest in the last couple of months. So you're continuing to do it. And the most important thing you said was you run it through the screener. You make sure the metrics are okay right now for UPS. So we'll just do the quick big one is the valuation because that's going to tell you everything. What's their current PE ratio at the moment? It's 15.87. So it's still a significant discount to the S&P 500, which is around 24, 25x. So at least it's still undervalued right now.
Undervalued right now, solid dividend payout ratio, dividend yields approaching 4%. That's why I still like UPS. I like UPS preferably under $170 a share. But again, tomato, I might have to grab one, as maybe I grab one by the time this video comes out. So we'll have to see about that.
Love it. So you talked about UPS. Got it. Almost like between 16 and 17 shares to go. Let's talk about CVS here. CVS.
CVS.
Yeah.
A dividend stock that is not well liked amongst the community.
No, I was going to say, I think it's at least a little bit more liked than Walgreens, which seems to be hated by everybody. All jokes aside, so currently, where do you stand with CVS? How many shares do you own right now? And then how much dollars are you going to need to get it to the 100 share mark?
CVS, a little bit easier to build. They were in that 60. It's funny, like just take off $100 from UPS and you're kind of where CVS stock trades at.
Shave it off. Yeah.
You are fired.
Yeah.
They've been really under 70, and that's where I was stacking in between that $67, $69 range for CVS. I've built it up now almost to 89 shares. I'm at 88.598. So getting much closer than UPS. Obviously, again, share price benefits there. To close the gap, again, they're at $71.76 now. To close the gap on those last 11 and a half shares, I need to invest about $818 right now to close
Okay.
out.
Well, that one's not too far off, Lanny. It's doable.
Not too bad.
No, it's doable. And I mean, if you're looking to spread to both, that's in a great spot. And luckily, yeah, when we look at the valuation of it, it easily answers that question of would you buy today? Because right now their PE ratio is 8.34. Again, CVS's PE ratio is 8.34, a third of the market right now.
Again, they don't get much love out there in the investing community. Obviously, they tackle on big debt on their balance sheet to do big acquisitions. They had a big one under the belt with that, and they've got a couple more that they just recently closed out and two closed out. So, they're always growing their business, which is why I like them. They're definitely I don't even know what type of game that they are, but because they don't increase their dividend every year either, as we saw with Aetna because of the mound of debt, but then they resumed it. They never cut or suspended. The payout ratio was fine during that whole spell, but they chose to pay down debt versus increase dividends.
Can't get mad about that. If anything, it's a more prudent thing right now, and it'll be rewarded by shareholders going forward when they get out of this. That's the right answer for not increasing your dividend.
Yeah. So, I mean, they yield 3.37%, which is above my BYM, my favorite ETF, as well as above the S&P 500, about 2 times that. So I really do like CVS. I like CVS under 70 preferably. But again, in total between UPS and CVS, I'm about $3,600 to $3,700 away from two positions crossing the $100 threshold or 100 share threshold. Pardon me.
Not too bad. So remember, everybody, both are showing signs of undervaluation. UPS's PE is 15.87. CVS's is 8. Lanny has a pretty decent amount, and they're both right around that buy zone. He said, I want to buy UPS if it's under 170. The time we're recording this, 170.49, right there. CVS, he wants to buy at 70. It's at 71.76 at this video. It could be below it at this time. Both are right there. So they're almost in those buy zones, each one of them.
Guys, if you're me, which one are you going after right now? What do you think is the better stock play, better dividend growth stock play here? Which one would you buy and have in your dividend stock portfolio? Let us know in the comments.
If you have
Guys,
an
yeah,
oh,
go ahead, Bert. Yeah, you
oh,
got this, man.
all right. Oh shoot, what I forgot. I don't know. What do I need to tell people? Subscribe to the channel if you haven't already. Give everyone the big old fashioned thumbs up. You know what, Lanny? Since you're the one that's about to get to 100 shares in these two companies, you tell them what the last thing is.
Before we jump into that, keep investing, guys. Keep saving. Keep sticking to your strategy. Get to financial freedom. And on this one, you're either with us or you're against us. That was Bert and Lanny from the Dividend Diplomats. Over and out.